Joining us now, Stephanie Link, Chief Investment Strategist, Portfolio Manager at Hightower Investments. I saw some of the stocks that you companies that you want to talk about today, Stephanie. I thought they were interesting. Let's just get right into them. They remind me of are they deep cyclicals? What are these things?
They are. They definitely are. I think the economy, the data that we've been getting for the last several weeks, months, quarters, is better than expected. We're running about 3% GDP. Good on the consumer. We've been talking about the consumer for like a couple of years now. Consumption in the GDP number this week that we got was up 3%. Personal income up almost 5%. Savings up 3.7%. So consumer is just fine. Manufacturing is what we don't talk about that often. And last week we actually got the S&P Global Manufacturing PMI that actually had new orders, Joe, 53%. That's a leading indicator. And we know that we had the IRA Act passed last year. We have $2 trillion in infrastructure spend that's coming our way this year and over the next couple of years. And so I think you want to own more industrials, more cyclicals. And that's why the names that I've chosen for today is that theme. The macro picture in the last week, we haven't talked to you. We have seen a couple of data points that were interesting. I think now is inflation back under control? Well, I mean, the inflation, it's the lowest since 2021. We saw in terms of the peak in PCE, core PCE, you went from 5.6 to 2.8. And so we're making progress. And so we may not get to that 2%, and then the last mile seems to be a little bit challenging, but we're getting there. And so the Fed is definitely done in terms of raising rates. And now it's just a question of how many times are they going to cut? I don't know if it's 2 or 3 times, but they are going to cut. They can cut. They have a dual mandate of jobs and inflation, and both give them the okay to do that.
Steph, the NASDAQ, we've been talking about it, finally regained all-time high ground, and that's with the benefit of AI. I don't know if we'd be there without that glow or those animal spirits. How would you describe what technology's been through the last 2 or 3 years?
Well, it's really amazing, right? I mean, AI, we've been talking about AI for many, many years, but obviously got really jazzed up about it last year as generative AI really took over and gained momentum. It's $1 trillion total addressable market by 2030, probably at a minimum, Joe. And so you definitely want to have exposure. I'm not sure you want to own, we've talked about this, I'm not sure you want to go out and buy NVIDIA up 270% in the last year, but there are plenty of names. I mean, you talked about Dell. These numbers were huge last night, and that stock trades at 13 times forward estimates, and you know the numbers are going to go much, much higher. When you have AI orders up 40%, you have a doubling of their backlog in AI, you have a PC cycle that has been dead for the last couple of years that is now starting to see a recovery. I think you can absolutely buy Dell up this much today, and I think you can also buy something like a CDW, which is something that I own, also on the same theme.
So, Steph, I try to remember everything you say, but, we have a lot of people that come on. I know that if there was one trade that almost across the board over the past few years, people always felt safe recommending healthcare. Well, healthcare, because everyone was always going to get older and it was always going to be a place to be. Recently, we've had some people on, I think Savita the other day, talking about there will be some margin compression. It's just happening. And then we saw some of the regulatory issues maybe facing one of the greatest healthcare growth stocks, United Healthcare. Were you bullish? Didn't you like healthcare in the past? And are you changing? Have we hit the, what's a nadir? Is that the peak of the bike? Have we hit the peak and are we on the other side?
Healthcare has been really frustrating, and yet you've seen healthcare earnings up about 8% in this past quarter. So we've had a lot of laggards there, other than biotech. Biotech has actually done really quite nicely. One of my biggest positions, Joe, is GE Healthcare. It's a spin from GE, and I think that the hospital utilization rates are going up. We're seeing it. CapEx from hospitals are going to be about 2.5%. They've got a great product cycle story, and they do have a margin improvement story because they're spun out from GE, where they were underinvested when they were part of GE. And so I like spins, as you know. And so I think you want to have be selective in healthcare. I don't think you necessarily broad brush. I do think United Healthcare is sort of interesting, especially because it's down a lot in the last couple of days on regulatory issues. I think it's a lot of noise. And I think they're going to have pricing power. They're not going to let their MLRs go up much more without actually offsetting that with price increases. And so that I like that one, too. I like Bristol Myers. That's like dead on arrival. The stock is trading at like 7 times earnings, has a great yield. So I think there are places and pockets within healthcare. But if I have to tell you, I much prefer some of these cyclicals that we were talking about in the beginning of the show. I like this Eaton a lot. I love GE now that they're spinning out Vernova. We knew that was going to happen, but that's good news that they're getting that past them. I like Masco, love housing. So there's a lot to do in the market beyond tech. I like tech, but there's a lot to do beyond tech.
Article today that I'm thinking weight loss, thinking that that sector of healthcare is like AI almost. Sure. But now supposedly, I don't know if I believe this, obesity is past hunger as the main problem of humanity. I mean that's both a good thing, that's a blessing and a curse. I mean, if we get to the point where the biggest thing we have to worry about is people are too well fed, fed with the wrong things, obviously. But if that's really true, it's hard not to think you can find a silver lining there somehow.